Hi everyone, welcome back to the US CPA classes for business analysis and reporting examination. So in this particular video of the state and local governmental accounting, I'll be walking you through in detail about the format and content of financial section of the annual comprehensive financial report, and more specifically we'll be discussing about the transfer of money in and out of the funds. So let's dive into to understand more in detail. Hi everyone, welcome back to BAR classes. So before we went on a break, we were discussing on governmental accounting. We have covered till all the type of funds. So quickly, I'll just walk you through what all things we have done so that you can connect the dot for the new topics. So we were discussing the level of reporting, in which we discuss comprehensive annual financial reporting that include two type of reporting: government-wide financial statement and fund financial statement. In government-wide financial statement, there are three reporting requirements for all governmental activity, business type activity, and component units separately. And for fund financial statement, there are three type of funds, which is one is government fund, second is proprietary fund, and third is fiduciary fund. And these are like the requirements of the disclosure we discuss, right? Then we discuss all type of fund: government fund, proprietary fund, and fiduciary fund. In government fund we discuss all five type of fund. In proprietary fund we discuss both type of fund: internal service fund and the enterprise fund. And we have also discussed on fiduciary fund. Then we did few questions, right? So now we are discussing like how to consider the money which is coming in and the money which is going out. How you need to do the accounting for temporary fund, permanent fund, or residual equity transfer, right? So temporary fund, that means special revenue fund, maybe for special purpose of revenue you have created, right? Permanent fund, which we have discussed, like an endowment fund, right? And the residual equity transfer to the government wide financial statement. What all things you need to do. So for temporary fund that sends the money, you debit the amount due from, and fund that receive the money, they credit the money. So for example, from let's say uh, from government fund, let's see over here, go back here. So in the government fund, there are five category of fund. One is general fund, second is special revenue fund, third is capital fund, fourth is permanent or endowment fund, and the fifth one is debt service fund, right? So for example, debt service fund. Debt service fund is generally, like for serving the debt. That means repayment of interest and principal of the debt. For that you have created a debt service fund. But from where the money will come in debt service fund? It will be coming from the general fund, right? So you'll have some general funds out of which you will be transferring certain fund to repayment of debt along with the interest. Yes, no.
Yes, sir.
Does that make sense?
Right, sir.
Right? So now, for example, you are transferring, like you are a state government, you are running a state government, you are transferring $1 billion from general fund to the debt service fund. So what will be the accounting entry in general fund? Debt service fund account debit to cash? Yes or no? Are you guys with me?
Yes, sir.
From
Yes,
general
sir.
fund, you are transferring money to debt service fund. So in the general fund, what will be the accounting entry?
Fund account debit to cash.
No, debt service fund account debit to
Debt
cash.
service.
Right? So debt service fund will be debit in your account and credit will be cash,
Cash.
which is going out. On the other hand, debt service fund, what will be the accounting entry there? Cash account debit to
General
general
fund.
fund,
Gen-
right? So when you are making a consolidated fund financial statement, this entry will get eliminated, right?
Right.
So maybe like in your school days or college day, you might have studied branch accounting,
Yes, sir.
right? You might have studied inter-branch transfer of assets or
Right.
property,
Yes,
right?
sir.
Same type of accounting entry, but when you are consolidating, you'll be eliminate that, right? So if you see, come back over here, the accounting entry is due from X fund. That means debt fund account debit to cash, right? And then later on, when they are receiving money back, then cash account debit to due to debt fund, right? That will be the journal entries.
Yes, sir.
Hmm? Now coming to the permanent fund. Fund that send money debited other financing use, and fund that receive money credit other financing sources. What is permanent fund? Do you remember what is permanent fund? Where you cannot pay from the fund, but you can utilize the revenue which you are generating from that fund, right? Like endowment fund. Same way, do you know like annuity plans which you might be doing for your family's member,
Yes, sir.
right? So what is annuity plan? That you give some fixed fund to the LIC or to any insurance company, and they give monthly, you can say, annuity to the beneficiary, right? So, but the amount will intact. For example, like last year, I did like some annuity plan for my parents, so that amount will remain same fixed over there, but lifetime my parents will get annuity for their monthly expenses, right? Same way, I'm sure like some of you might be using annuities for yourself and for your family member. If not, this is very common, like which most of the people do use for the recurring source of income, right? Same way, in this amount, like amount is freeze. My parents cannot use that money for any other purpose, but they can use the annuity which they are receiving for any purpose they like it. Same way is the permanent fund and endowment fund is also, that the fund will intact, but any earnings you are receiving from those funds, that you can utilize, right? So when you're earning money and utilizing that means you are using that, so you will be debiting other finance usage to cash when you are providing the fund for the expenditure purpose. And when you are receiving back, then cash account debit to other finance sources. Make sense?
Yes, sir.
Hmm?
Yes, sir.
Residual equity transfer. Permanent transfer of money from one governmental fund to another governmental fund or non-operation purpose. That is usually seed money to get the fund started. For example, like if you see in India, Government of India has created many initiatives in last couple of years. I'm sure you all might be seeing it, like Make in India. You have heard about it?
Yes, sir.
Startup India, Invest India, right? I'm
Right.
sure you might have heard about this. Agni, Jal Shakti. So these all are like missions which the government have created, but these are new missions, right? But from where they got the fund? They got. Hmm?
Help from them, sir.
Yes. So this residual equity transfer is that only when you are creating some new initiative or some new mission, and you are permanently transferring fund from one fund to another fund to start the new initiative is called residual equity transfer. Make sense?
Sir.
Akash, Ayush,
Yes,
Yes,
sir.
Alia,
sir.
Kashish? Okay.
Yes, sir.
Right. So this is transfer of money in and out of the funds. Another quick small topic is the deferred resources. So deferred resources, it can be inflow of resources or it can be outflow of resources. When resources outflow is called deferred outflow resources, when you are consuming net assets which is applicable to the future reporting period. That means expenditure paid in advance of the timing requirement, such as prepaid item or deferred charges. On the other hand, deferred inflow of resources, that means you have received money in advance. That means acquisition of net asset applicable to the future reporting period. That is money received in advance of the timing requirement, such as deferred revenue or advance from customer. Right? So those all are being recorded as deferred resources. It can have a debit balance or it can have a credit balance as the case may be. If you have given some money in advance as a prepaid or advance money, it is deferred outflow of resources. That means you are giving cash in advance. But on the other hand, if you are receiving money in advance and you will be providing product and services later, it is deferred inflow of resources. That means those resources you need to defer and to be considered for the future period. Right? Make sense?
Yes, sir.
Okay. Deferred resource reporting. So you need to report those deferred resources into fund financial statement. Deferred outflow of resources will be reported as a separate section after the assets, right, in the financial statement. Or if there is deferred inflow of resources, that means inflow means liability. That means you have received money in advance. So that you need to report after the liability section, right? Statement of net position, you will be showing residual amount in the reporting of net position rather than net asset. Any doubt here?
No, sir.
Right? Component of the statement of net position include net investment in capital asset, restricted assets or unrestricted asset. So let me take you to a small Excel sheet for the clarification. Statement of financial position. So statement of financial position, statement of fund financial position is similar to balance sheet, right? You'll be having assets. In that you'll be having non-current and you have PP&P, right? This will be your total of assets, right? Same way normal balance sheet, would it happen? And then you will be having liabilities, which include your current and non-current, right? And then the last one will be your net position. So instead of equity, what will be there in disclosure? Net
Net.
net position. So within the net position, you need to give three disclosure. The first disclosure will be net investment in capital asset. Second will be restricted assets. Restricted. And third will be unrestricted. Right? So this is how you need to present the financial position. Make sense?
Yes, sir.
So now you can correlate what are these things. Three items which you need to disclose. This is component of statement of net position. Right? Any doubt?
No, sir.
Net investment in capital asset component include deferred outflow, inflow of resources from the acquisition, construction, improvement of capital asset or related debt. Any significant unspent related debt proceeds or deferred inflow of resources at the end of the reporting period are included in the same net position component. Now coming to the grant. So grant, like if you remember in last class we discussed there were two type of grant. One is grant which have no restriction and one is a grant which has certain time restriction, right? So we'll be discussing that also in detail. What is grant? Any idea?
Restricted grant तो sir वही हो गया.
No, what is grant normally?
Okay.
So some investment of money given by the government for specific purpose.
Basically sir वही government grants जैसे होते हैं, like they give to institutions, to hospitals, to educational institutions. So amount of money given to like donation donation is a different word, but yeah, giving money basically.
Yeah. So whatever we have seen so far and whatever we have personally experienced so far, that we are receiving grant from the government for specific purpose and utilizing that for the particular purpose, right? But now what you are doing governmental accounting, right? So you are at giving end. You are providing grants to the NGOs, to the trust, to the society, to the hospitals, to the education institution, right? So now you are in other side of the table. Make sense? So grant, under a modified accrual accounting, a governmental entity cannot recognize restricted money as revenue until it is being spent for the intended purpose. The term grant are met. That means, for example, central government, federal government has given certain grant to the state government for utilization for specific purpose. So they can recognize the revenue. They can recognize the amount of grant only if they have spent for that specific purpose. Otherwise not. Right? Grant are of two types. One is with no time restriction. The other one is with the time restriction. So entity could spend the money immediately with no time restriction, right? For example, if you have received $1 billion of grant, which is like free grant without restriction, that you can utilize for immediately. On the other hand, if you have received $1 billion of grant, which you will be getting $200 million each year for next 5 years, then entity must wait to spend the money based upon the timing of restriction. Make sense?
Yes, sir.
Hmm? So left hand side, if you see, upon receipt of grant, you will be debiting cash and crediting deferred revenue. When you are receiving the money, it is your liability. But when you are utilizing that money, then you can recognize the revenue. So recognize the revenue once it is spent for the intended purpose. Then you will be debiting deferred revenue and crediting the revenue. Make sense? So when you are receiving the money, what will be debit? Cash account debit
Cash debit to deferred
to
revenue.
liability, right? Deferred revenue is a liability,
Liability.
right? And when you are utilizing that money at that point of time, you will be debiting the deferred revenue, removing the liability, and recognizing the revenue, crediting the revenue. Make sense?
Right.
Yes, sir.
Same way, like grant with a time restriction. When you receive the money, it is cash account debit to deferred inflow, which is your liability, showing the liability, right? And once time is completed and you have done the spending, then removing the liability by debiting deferred inflow and recognizing the revenue to revenue, right? Small note here. Governmental financial reporting should provide information to assist user in following situation. The first one is making social and political decision, and second is assessing whether current year citizen receive the services but shifted part of the payment burden to future year of citizen. So these are some like touch point or data point which government do get out of this, right? One small question here. A city received $9 million federal grant to finance the construction of homeless shelter. In which fund should the proceed be recorded? Permanent fund, special revenue fund, general fund, or capital project? Are you getting what is the call of the question? From
Yes, sir.
federal government, city has received $9 million to construct the shelter for homeless people. So where should we
Sir,
record?
special revenue.
नहीं सर ये तो कैपिटल प्रोजेक्ट भी नहीं होगा परमानेंट भी नहीं होगा जनरल हो गया सर ये तो
तो स्पेशल भी हो सकता है क्योंकि होमलेस के लिए ही जा रहा है सिर्फ.
Hmm. So look at this special revenue fund.
special revenue
No, just read this just for your benefit. General fund is being account for all financial resources except for those accounted in another. So this is residual, right? General fund is residual. First you need to look at all the four category of fund. If nothing is fit into that, then you can put into the general fund, right? What is special revenue fund?
for a special purpose.
Just read it out, Kashish, for the benefit of everyone.
Special revenue funds are used to account for revenue sources that are restricted to a specific purpose other than debt services or capital good acquisition.
Or what is capital project fund?
Capital projects fund accounts for financial resources that are specified for acquisition or construction of major capital facilities for general government, not for enterprise or fiduciary fund purpose.
So what is the category of?
सॉरी सर एक बार उस पे जाना वो वहां पे ना जनरल गवर्नमेंट लिखा हुआ है वो जनरल पब्लिक होना चाहिए कैपिटल प्रोजेक्ट्स में ऑफ मेजर कैपिटल फैसिलिटीज फॉर जनरल गवर्नमेंट है मुझे थोड़ा डाउट है तो पब्लिक के लिए यूज होगा ना ये सर जो कैपिटल प्रोजेक्ट्स गवर्नमेंट अंडरटेक करती है जो फंड्स एलोकेट होते हैं वो जनरल
बोथ.
ओके ओके ठीक है सर ठीक है
बट इसमें सर जो स्पेशल रेवेन्यू वाला जो सेक्शन है ना, इसमें जो स्पेशल वो स्पेसिफिक पर्पस है वो डिफाइंड नहीं है। तो मुझे लगता है कि वो अगर क्वेश्चन में आएगा तो आइडेंटिफाई करना डिफिकल्ट होएगा कि स्पेसिफिक।
That is the reason we are doing practice here, no?
हाँ वही सर।
So that like you can connect those points.
सर अगर ये डेफिनेशन देखें तो मेरे ख्याल से कैपिटल प्रोजेक्ट्स होगा, क्योंकि लाइब्रेरी, सिविक सेंटर और ये सब जनरल पब्लिक के लिए
जो
capital
हेल्पफुल है, तो
है।
मेरे हिसाब से जो नीचे हमें ऑप्शन दिया है कि होमलेस शेल्टर बन रहा है, so then it should be capital project.
Kashish, Abhinesh, Vartika, what's your view?
तो शेल्टर के लिए तो सर फिर वो पर्टिकुलर पर्पस तो सॉल्व कर ही रहा है, तो स्पेशल रेवेन्यू होना चाहिए वैसे।
No, special revenue are like when you are making investment to earn the revenue in future, right?
ओके
But
ओके
here you are not earning anything from those homeless people. It's like
Okay.
dharamshala banana,
हम्म
right?
तो
Same way
फिर
like
तो
how in Delhi, I think Kejriwal government has made few shelter home. It's same thing. So they are not taking any money from those homeless people because they do not have money, right? Makes
तो
sense?
कैप यस सर कैपिटल
So
प्रोजेक्ट।
what it
Capital
will be?
project.
Capital project, right? Makes sense?
Yes, yes.
Akash,